In May 2025, a historic moment quietly reshaped the future of global technology, and barely anyone noticed. Saudi Arabia and the United Arab Emirates pledged over $1.5 trillion to invest in American artificial intelligence, energy, and chip-making industries. But this wasn't just about business. Donald Trump was there. So were Elon Musk, Sam Altman, and NVIDIA's CEO, Jensen Huang. What's really going on? Who's benefiting? And why should you care? Let's start with who's putting their money on the table and why. In May 2025, during Donald Trump's high-profile visit to Saudi Arabia and the UAE, both nations announced massive investment commitments in the U.S. technology and infrastructure sectors. The United Arab Emirates pledged a staggering $1.4 trillion over the next 10 years. Their focus? U.S.-based energy projects, AI infrastructure, and semiconductor development. Saudi Arabia isn't far behind. Through its tech arm Datavolt, it committed to a $20 billion AI and energy deal, forming part of a larger $600 billion U.S.-Saudi economic cooperation plan. As Billy Mitchell of NextGov reported on May 20th, these investments aren't random. They're part of a calculated strategy to become global leaders in AI by leveraging American innovation and infrastructure. The Gulf states are diving deeper into U.S. markets, positioning themselves not just as customers, but as partners in the next AI revolution. So where exactly is this money going? A major share is flowing straight into U.S. soil, funding AI campuses, data centers, advanced chip fabrication labs, and clean energy infrastructure. According to the White House fact sheet published on May 19, 2025, these capital flows are being directed toward strategic industries vital to both national security and technological supremacy. Meanwhile, American companies are exporting high-end AI technology back into the Gulf. One of the most striking deals involves NVIDIA, which is set to deliver up to 500,000 AI chips annually to the UAE, as reported by Marwa Rashad of Reuters on May 15th. That means Middle Eastern capital is powering U.S. infrastructure, while American companies like NVIDIA are fueling the Gulf's AI ambitions. It's a two-way pipeline of money and technology, but the core foundation remains American. So what does this historic investment say about the global economic climate? In a world shaken by inflation, interest rate swings, and geopolitical uncertainty, this move signals something powerful. The Middle East trusts America to lead the AI revolution, and they're willing to back it with hard capital. As Frank Holmes, CEO of U.S. Global Investors, pointed out in a May 20th analysis, these are long-term sovereign bets. The Gulf nations are placing their confidence in U.S. technology and regulation to deliver returns in the next wave of global growth. This isn't just about financial returns. It's about anchoring their future to America's innovation ecosystem. Even with Donald Trump, a controversial figure globally, leading the diplomacy, the money still flowed. That's confidence. Multiple authoritative voices have weighed in on this deal, offering both praise and concern. First, Shane Harris of The Washington Post raised national security concern. He noted that U.S. chip exports to the Gulf, particularly NVIDIA's high-end AI hardware, may empower regimes that don't share America's values. Quote, "The shift in U.S. policy on AI export controls risks unintended consequences in the Gulf, military and otherwise." From the Carnegie Endowment, analysts Alastair Phillips Robbins and Sam Winter-Levy published a joint paper warning that Trump's reversal of Biden-era export restrictions could open the door to long-term dependency issues and tech leakage. On the other hand, Billy Mitchell from NextGov highlighted the scale of this partnership, calling it a transformational alignment of Gulf capital and American AI capacity, focused on energy, semiconductors, and smart infrastructure. So there's optimism, but it's cautious. Elon Musk, Sam Altman, and Jensen Huang didn't fly to the Middle East for selfies. They were there to shape the future. Let's break it down. Elon Musk is advancing AI through his company xAI, and building out Tesla's computing power and infrastructure. He wants in on global GPU supply and sovereign AI deals. Sam Altman, CEO of OpenAI, is building global AI influence while lobbying for more compute access and policy alignment. Jensen Huang, the CEO of NVIDIA, is already the most sought-after man in the AI hardware world. NVIDIA's chips are the gold of this AI era, and everyone wants a piece. According to Business Insider, their presence wasn't ceremonial. They were central to negotiating chip delivery, AI training infrastructure, and energy-sharing agreements with Gulf partners. It's geopolitics meets Silicon Valley, and everyone wants front-row seats. This isn't a spray-and-pray investment strategy. The Gulf money is laser-focused on a few game-changing sectors. First, AI infrastructure. This includes data centers, compute farms, and neural network training hubs across the US and in the Gulf. Saudi Arabia's Data Vault is anchoring this effort, according to Billy Mitchell's reporting at NextGov. Second, semiconductors, especially GPU manufacturing and export agreements. NVIDIA chips, particularly the H100s and B200s, are being earmarked for Gulf clients, with massive capacity expansion planned on U.S. soil. Third, energy tech, both traditional and clean. Gulf states are investing in U.S. nuclear energy, battery innovation, and hydrogen R&D, not just oil. As reported by Marwa Rashad of Reuters, these investments also target digital infrastructure, such as smart grids and AI-integrated logistics systems. Think AI plus chips, plus energy, plus digital infrastructure. That's the Gulf playbook, and it's betting on American soil. So, what does this massive capital injection mean for the U.S. economy? In short, more jobs, lower supply-side inflation, and stronger growth. Let's break it down. AI campuses and chip fabs mean high-paying tech and engineering jobs, especially in underserved regions. Gulf-backed infrastructure investment reduces dependency on government spending, lightening the fiscal load while boosting productivity. The energy projects, nuclear, hydrogen, and clean grids mean cheaper power over time, reducing production costs and curbing inflation at the source. This is a classic supply-side stimulus. Private capital solving public sector bottlenecks. As Frank Holmes put it, this is one of the rare moments where foreign capital inflow acts as a deflationary force and growth catalyst at the same time. It's not just capital, it's economic reinforcement. If you're an investor, how do you ride this wave? Here are 3 clear plays. 1. AI hardware and compute. Look at NVIDIA, NVDA, Broadcom, AVGO, AMD, and suppliers of chips, semiconductors, and AI training infrastructure. ETFs like SOXX and SMH give you sector-wide exposure. Second, energy tech hybrids. Companies like Nextra Energy, Brookfield Renewable, and even GE Vernova are set to benefit from cross-border energy investment. 3. Infrastructure and real estate. REITs. AI and chip fabs need land, water, and power. Real estate near these developments is a long-term bet. Think Digital Realty Trust, DLR, and Equinix, EQIX. And don't forget early-stage exposure. Funds like ARKQ or Global X AI ETF are diversifying into frontier tech aligned with Gulf capital trends. Bottom line, follow the chips, follow the power, follow the partnerships. That's where the money's going. So how do you stay ahead of the curve? You track the signals. Here are 5 key ones to watch. First, GPU export deals. Pay attention to NVIDIA shipments to Gulf nations and U.S. facilities. If volumes spike, demand is expanding faster than expected. Second, AI regulation shifts. Follow policy changes from the U.S. Commerce Department and new bills on AI governance or export control. A rollback or enforcement tells you who's in favor. 3. Construction of data centers and chip fabs. Look for announcements in states like Texas, Arizona, and Georgia. Real estate and local job growth will follow. Fourth, Gulf sovereign wealth activity. Track moves from PIF, Saudi Arabia, and Mubadala, UAE. Their U.S. holdings reveal their future bets. 5. Earnings calls from big tech and AI firms. When Nvidia, Microsoft, Amazon, or OpenAI start mentioning Gulf partnerships, it's a clue more capital is entering. These are your early warnings, your GPS for the AI global investment map. And finally, the most important question: what can you do with all this? Here's the good news. You don't need to be a millionaire or work in Silicon Valley to benefit. First, upskill in AI-related fields. Take affordable courses in AI literacy, prompt engineering, cloud infrastructure, or data analytics. Platforms like Coursera, LinkedIn Learning, and Udemy offer entry points that are cheap and flexible. 2. Join the ecosystem indirectly. Start a side hustle using AI tools like ChatGPT, Midjourney, or 11 Labs. Content creators, educators, and freelancers are already earning. 3. Invest smart, even with $100. Use apps like Public, Robinhood, or ETFs like SMH to gain fractional exposure to chip stocks or AI infrastructure plays. 4. Watch your local economy. If you live near an area receiving Gulf-backed investment, there may be job opportunities, real estate booms, or business niches to fill. 5. Think long-term. This isn't a quick flip. The AI transformation is a 10 to 15-year shift, much like the internet in the 90s. Start small, stay curious, and follow the flows, not the noise. Because when trillion-dollar nations bet on a new world, the smart move is to follow quietly and steadily, one step at a time. If you found this breakdown useful, make sure to like, share, and subscribe to stay ahead of the next big shift. In a world of noise, we focus on signals. This is the Alpha Economist, breaking complexity into clarity.